Record-setting numbers by Mahindra and Mahindra. The only problem is that the street anticipates them to do well every quarter, and therefore the expectations are set so high that it must be becoming difficult for Dr. Anish Shah and team to beat them. Dr. Shah, is that a good problem to have or a bad problem to have?
Well, at 66% operating profit growth and 47% reported profit growth, in some ways I can say it's a good thing that people continue to expect us to do well. And it's probably a better thing that we stay slightly ahead of their expectations as well.
Yeah, but you're creating benchmarks, right? I mean, every number is a milestone, I'm sure, but a 50,000 crore number or whatever the X numbers that you're setting up, how do you see the trajectory ahead as the base goes up, but presumably the opportunity size goes up with all the FTAs that India is signing, maybe export opportunities going up, but maybe the enhanced competition as well coming up, though I know you've said that it's always competitive.
On that, Neeraj, as you're a market leader, you always have more opportunities. First of all, the profit pie grows as you become a bigger market leader. And what we are seeing is large businesses are capitalizing on that leadership. Our smaller businesses are starting to grow much faster and get towards that market leadership. So it's about pure execution. Our teams focus on what we call our input metrics. If we do our input metrics well, we will get the right output metrics, and collectively we will get the right results. So our focus is keep our head down, deliver what we have to deliver, the results will follow.
Okay, I'm going to use some numbers here to just get some answers from you. So one thing that people really want to know is the update on the booking number for 9S, 7XO, because I think some 95,000 bookings that you've received and multiple other facets as well. How do you think of the deliveries for all of these, and what happens with the increasing number of EVs in your portfolio, whether they result in some bit of margin dilution, considering that input costs as well are moving higher?
So we are adding some capacity to EVs as well. The bookings continue to be very strong at dealerships on a daily basis. So that trajectory is a good one. And there is a wait right now because the demand again has exceeded our expectations. As we keep ratcheting our expectations up as well, we keep continue getting more demand. And on balance, I think we are in a good shape. We've also announced a new plant which will significantly increase capacity, but there are a number of actions between now and the new plant coming up for us to do that. Therefore, we should be able to deliver what we need to for our customers.
It's a good headline number. 15,000 crores in Nagpur is the one that you're referring to right now,
That's
right?
correct.
Right. So give us some sense about it. I mean, what led to this kind of expansion? How do the timelines work with such an expansion?
So this expansion has been in the works literally for the last couple of years. Just as perspective, we've gone from maybe about 19,000 SUVs a month as capacity, roughly about 5 years ago, to maybe 65 to 70,000 as capacity right now. So we've increased capacity quite dramatically already. And that's what we often talked about, a 4x increase in capacity or close to a 4x increase. From now, we will continue increasing capacity further as well. But given the trajectory we've seen, given the demand we've seen for our products, and a range of products that are coming in that we've announced, the Vision S, the Vision T, the Vision X, which will create I would say a very, very strong set of offerings in the sub-4 meter range. We will need much more capacity for that. So therefore, the expansion in Nagpur is essentially planned for us to be able to get that capacity. If we have to continue beating expectations, we need the capacity to do that.
Okay. Would it become difficult to beat expectations on operational metrics? I don't know if I missed that answer on the margin front in the previous one, but one, the rising share of EVs, two, the rising input costs. And if I talk to steel makers or aluminum companies or copper companies, all of them talk about the cycle likely to continue for the next 12 months to 24 months. Nobody knows, but that's the guess. So assuming that happens, right, how do you combat that?
So we have been able to absorb most of it in our operating leverage. And we've shown, despite all those increases, a 90 basis point increase in margin for auto. And a 240 basis point increase in margin for our tractor business. We also have announced a 1% price increase because we haven't factored all of that in there as yet. So as we look at it point to point over the last 6 to 8 months, We have seen a greater increase in commodity price, but we feel that a 1% profit margin price increase is sufficient in that sense, and that allows us to stay on track in terms of what we planned.
And you reckon that even if the trajectory on the input costs were to continue, slight incremental price increases coupled with the volume growth will do the trick for you?
That's right. So we're not too worried about commodity price growth at this point in time.
Got it.
And we can't forecast much of it.
Of course. So. I don't think too many people can, but I was just trying to get you a sense of what the producers were saying, because that's the best guess that I would have. Tractors, very strong numbers. If I remember correctly, about a quarter ago when we spoke, you mentioned that while the going has been strong, if we have a good summer, then you are actually looking at a fairly good tractor demand in calendar year 26. Does that stay on track? What are the initial reference points that you are seeing with regards to that segment?
So on that, Neeraj, the tractor demand over the last couple of quarters has been just off the charts, completely off the charts. And we were just talking at a media meet that we'd given a higher forecast for this year of a low double-digit growth, and it's likely to be double that. So the tractor forecast is a function of the rural economy right now, is just absolutely gung-ho and growing at a very rapid pace. That said, we obviously do not expect such level of growth to continue. So for us, the longer-term forecast for tractors always is a high single-digit growth rate. And we have other growth levers that we deploy around farm machinery, around international, around profit growth, operating leverage, etc., that gets us to the results we need to deliver. But the industry is longer term a high single-digit growth rate, and that's what we'd probably expect, again, going back to normal for next year. We may again be surprised positively with some of the momentum continuing, but we're not sure at this point in time how far the momentum will continue.
Thus far, does it look, क्या आसार अच्छे हैं quarter 4 के लिए? Does it look okay?
So far, it looks very strong as well.
Okay. And if the monsoons were to continue, then maybe that momentum might just slip.
Then that it's possible it might continue, but again, we would not factor a 30% growth year over year for any industry, right? That's one that will catch up at some point.
Okay, one company question and then two macro questions. So does it look like, I'm not asking you to give me a number, but does it look like the momentum that you've gotten achieved all through the year, but particularly in quarter 3 with the benchmarks and the records that you're setting, continues well into quarter 4 at the very least? Consolidated entity?
I'll repeat on this, Neeraj, which is our focus is on the input metrics that we have. And as we continue delivering those well, our results come in. We do tell all our teams that we shall not talk about best ever, because every quarter has to be the best ever.
True.
So we will just be repeating ourselves if we do that, but that's the kind of performance we want to drive.
Okay, a couple of other questions. One is this whole scare that, call it a scare, but whichever way you look at it, the news that the Anthropic and the Palantir release created. How big a change could such a thing usher in for IT service companies?
Not significant.
No?
I think there's been a high degree of overreaction to this. We've known what the benefits of AI are, what are the things that are going to change as a result. And AI does bring in a high level of productivity, but so has a lot of other technologies over time. And IT services firms have adapted to that. There are greater opportunities created because it's really not just about driving productivity. It's about creating a better customer experience, driving more revenue for companies, being able to do much more than what we've done in the past. And that's what AI brings in, that's what quantum brings in. So we see a lot more opportunities opening up for IT services firm. If you go back 25 years, we've gone through everything from call centers not being required to Y2K coming in and IT services being predicted that they will die after Y2K happens.
But isn't this different, Dr. Shah?
Every time something comes in, it looks different. When blockchain came in, it looked very different at that point in time. So the fact that it's here and now makes it look different. But technology in general is always very much hyped in the short term and sometimes underappreciated for the long term. So AI will have a very positive impact. But at this point, the hype is far greater than reality.
Okay, my final question, because we haven't had a chance to talk to you post the US FDA deal done, but even post EU FDA, I haven't spoken to you. And for a lot of auto experts, the EU FTA, as and when it comes into being, is a far bigger import competitive scenario than the US one. How do you think about it? Because it may kind of coincide with the upper end of the vehicle price range that you might have, and therefore competitive intensity only going up further at that price point.
I think the government has done a very nice job balancing multiple factors and created something that's a win for both the EU and for India. It creates a win for India because it still incentivizes foreign manufacturers to make in India, which is what we want. We want everyone to make in India. It really doesn't impact competition for us at all because all the European models are here in India today. And it's not as if any OEM can make a car there, ship it to India, pay the cost for that shipping, pay the cost of holding inventory for those 3 or 4 months more, and be able to deliver it to the customer at a lower cost than what they can make in India today. So from that standpoint, competitive dynamics really don't change. It creates an imbalance if a European maker could say, I will shut my India plant and send everything from there. But that is not the case because the government has set it up in a way where it incentivizes companies to continue the plants in India, to continue to make in India as well. And that's the reason why I say it has been done really well. It's balanced multiple factors and created a win for both and created an opportunity for us in terms of being able to send our vehicles to Europe. And that's something that we will take advantage of.
Well, the numbers show that you have every right to be optimistic with everything that's happening around you. But lovely talking to you, Dr. Shah. Thanks so much for taking the time out and speaking to us.
Likewise. Pleasure talking with you, Neeraj.